This is the option strategist GPT that I made. This helps you in choosing option strategies, both intraday and if you're looking at weekly expiries or monthly expiries, whichever way. All you need to do is provide an option chain snapshot and then the underlying asset price charts for daily, 4 hour, 1 hour, 15. The more you provide, the better it's going to be. So let's start off by looking at, so I'm looking at the Nifty 50. We're looking at an expiry of 4th of April. Today is the 1st of April. And what I'm doing is, so I can see Vega, Theta, Gamma, Delta, and all these different columns. I'm just going to take a snapshot of this. That's the first thing that I'm doing. And I upload it here. I then also need to, one second, I just go to Trading View and go to the daily chart. This is what it looks like. I have my own annotations here, mostly supply, demand, support, resistance kind of stuff, which I find useful. So I'm going to now take a snapshot of the daily time frame and just again provide it here. Move on to the H4 and I'll toggle my annotations again over here. Take a snapshot and paste it here. Similarly, go on to the H1. Nothing very much happening here, but whatever. And I take a snapshot of the H1, paste it here. And now finally for the M15, I'm not going to go to the M5 for the time being, but yeah, okay. I can see mark some levels, some support, resistance, some POIs, that kind of stuff. So this is my M15 and I take this snapshot and I again put here, and now I don't have to do anything, just press enter and let's see what it does. So it's gonna read these images hopefully, and yeah, that's pretty much it. So it's analyzing and it says, say something please. Yeah, based on today's date, let's examine the provided inputs. The option image indicates the expiry as so and so. So it's, reading all of this. Given these inputs, let's craft an option strategy. We would consider the following factors: short time to expiry, which can lead to rapid time decay; current IV levels, which will affect the price. So now let's review the charts in more detail to understand the recent price action. So it looks at the daily chart. There's an uptrend with recent price action showing a bullish movement. Price consolidation is visible, which might imply a period of accumulation distribution. 4-hour chart, uptrend is consistent, but again, price appears to be breaking out the recent consolidation zones, suggesting a possible continuation of the uptrend. 1 hour shows a sharp rise, which is in line with the bullish movement. The price is near the upper range, blah blah blah. 15-minute highly volatile with sharp movements, which is expected on the 15-minute. This chart would be more relevant for very short-term trade setups. One potential strategy is a bull call spread, which is a moderately bullish strategy that benefits from both an increase. So for the bull call spread, buy a near the money call option, sell a further out of the money call option. We'll use Nifty 50 strike prices from the option chain, and so yeah, so this is what it suggests for the bull call, and says this is when you execute it. So you're basically buying and selling calls at these strike prices. It also tells you a little bit about trade and risk management. Enter the trade as soon as possible given the time sensitive nature of the option expiring in 3 days. Profit target, look for a quick move towards one. So since time decay is aggressive, stop loss should be here. Position size, due to the short expiry, high IV, it is prudent to allocate a small portion of the capital to the trade to manage risk effectively. Then something about adjustments. If the market moves, then what you should be doing. Post trade analysis. So yeah, please execute this trade considering your individual tolerance, and so on. So let's say thanks. Any other suggestions? Let's see if it has something else to say. Okay, Another strategy could be a short straddle, neutral, and then it gives you how you should be executing the short straddle, and again the whole trade and risk management. So yeah, so this is pretty much it. Feel free to use it, have fun, and see if it kind of makes sense. You could also, when you upload these figures, if you want to write something in terms of, so let's say we have elections happening in India, so that's going to, I think, lead to a lot of volatility. So I would probably mention the date for the elections here, and see how it goes. So this is what it has suggested for if you want to trade a short straddle. Then it also says, lastly, due to the high IV, a short iron condor might also be suitable. And then it goes on and tells you about this. So yeah, pretty much that's what it is. Go have fun.